CEO, Helios Mutual Fund. Dinshaw, great to have you with us here. Thanks very much. My question is about Tega. I trust you heard the conversation. You've seen the deal, the big acquisition, etc. You've been in the market a long time, and Indian companies are now starting to do these leveraged buyouts. Still rare, but this one is one of them, in a large size. I mean, any thoughts, Dinshaw? It's not a Tega-specific question or what industry they're in, etc., but the way it's structured. Yeah.
Yeah, but thank you for having me on board, Prashant, and very good afternoon to you and your viewers. Yeah, that's one thing that I think we've not seen in a while, these LBO kind of deals, which I think is a very big positive because that makes the market very vibrant and opens it up. In fact, today only we had a meeting with the Israeli regulators that come across, and they were trying to wonder why nobody's investing in Israel and stuff like that. But anyway, the fact is that India is becoming a very attractive destination even for raising capital as such. So I think that's something that has to be looked forward to. In fact, as I told them, that look, $4-5 billion of flows every month happening in mutual funds is not a small deal at all, which was unheard of earlier. So obviously we are becoming very attractive in that way as such. So, but I'll leave it here. I won't even comment on Tega, by the way.
Hi, Dinshaw. Good to see you in. What about you all got everyone's fancy when you all, focus on the EV space and the EV theme out there? A couple of them, I think, proper disclosures have already been made. Ola Electric has got a long way to go from here as well.
Actually, Nigel, not only Ola, we also picked up Ather at the time of the IPO itself. We were anchors there. And I remember you guys asking us questions on that, or rather me specifically, on why we picked up Ather. So I think we are very convinced on that space. That is, going forward, that is the space that you want to look for, at least in the two-wheeler. And we are very convinced that even Ola, earlier we didn't pick it up. Actually, we picked it up sometime in August itself after the quarterly numbers came out. And our conviction went higher when the management came and reiterated that they will be improving their margins going forward, and how the contribution is going to improve, and how the new product is going to be a very the generation 3 that is going to be a far better version of Gen 2 and Gen 1, obviously. So it was obvious. And by the way, after we picked up, the stock remained there for a while. But I think after the 15th of August, when they came up with the Gen 3 demo in Delhi, and obviously the new battery launch, I think that's when the stock really reacted upwards. And we were convinced that this is going to be the way forward. And obviously, there's much more to go in this than what we've seen before.
So that is on EVs. Dinshaw, hi, good to have you in. So consumer. We've discussed financials. We know you love financials. But this whole market seems to be, taking a big punt on consumer. Now, I don't know if that's what it is. If it's a passing fad punt, or if it is something that can make you lasting money. I mean, if it's worth pivoting a little bit in the portfolio towards other names, other auto companies, it could be other platform companies. You tell us, or how are you thinking about it?
So, Survi, actually, we're fairly convinced. I mean, as in the sense that with the changes in the GST. In fact, by the way, my analyst team today is in various parts of UP trying to gauge the festive demand itself. And whatever they've been calling in with, they're very convinced that it seems the retail is all geared the way they're stocking up. They're geared for a bumper festive season. And obviously coming on the back of these price cuts because of the GST cuts, I think that's going to be a really fun festive season for most of the retailers. So we were very convinced earlier only when the announcement happened on 15th of August, we realized that this is where you want to be. And that's why we didn't go and bulk up on what we were, rather buy new names. But we already were in these consumer discretionary, if you will, names, very different kind of names like tourism and stuff like that. And obviously healthcare, which we would classify as consumer discretionary because that's how it should be. I mean, hospitals I'm talking about should be classified as. So those are the kind of names that we are in. Obviously, the platform companies have done well, and they will continue to do well on the back of this, because once you have savings left, this is where you're going to spend it on also. And as I tell everybody that if a foreign investor comes to India, he will be the last guy who will go and buy a cement company or a steel company, because he's got to go back and tell his investors that I went to India and I bought these differentiated plays rather than the same run-of-the-mill which you can get in your own country. So I think that is where the real fun is going to happen. So.
Yeah, no, absolutely. Any thoughts on another name, Dinshaw? Piccadilly. It's in a space which you attract alcoholic beverages. There's a allotment which has happened to some high net worth individuals. I'm sure you've picked up on the news.
Prashant used the word track very carefully. I was wondering which adjective you'll use. A space you like, a space you consume. But he's gone with track. He's playing it safe. So Piccadilly.
Yeah, but no, we not. So basically, the fact is that there are only a handful of names in this particular segment. We hold one of them, but that's only in one of our funds, which is in the mid-cap fund, where the small-cap play on alcoholic beverages is there. But otherwise, we're not that clued on to this sector, as Prashant put it. But yeah, as a consumer, I'm a fairly good consumer of that. So I'll leave it here.
It's like a confessional. Yeah, but you know, it's a what, 6,500 crore market cap company. I mean, perhaps in the listed space, perhaps the smallest, right, in the branded space. And just looking at the price, it had gone up to almost $1,000. Not 1,000 actually. The high was about almost 985 was the high. And it's come off a little bit, but 720 now after this 14% kind of a move that we have. Anything else on your radar? What's the new Ola or Ather?
If there was, you'll see it in my end of the month portfolio, Prashant. I won't be telling you anything upfront.
But you're anchor investors in Urban Company, right? You're participated.
Yes.
So tell us the rationale behind this investment.
So it's the same, Rima. I mean, if you see the kind of platform that he's offering, actually it's a platform company, right? I mean, you get varied services across. You don't need to spend capital on introducing new business lines. You just need to have that service in place and people will buy. In fact, nowadays they've started the Insta-made services and all, which is phenomenal because my wife also uses it regularly. Actually, the 15 minutes the maid comes to your house for a couple of hours and stuff like that. That's phenomenal service. So there are lots of options available here, and I think it's got a long way to go as such in terms of the potential market that it has at its discretion. And in fact, globally also, if you see these kind of service platforms are fairly handful of them. So it's a very unique platform which India has to offer, and probably a monopoly in its space right now as of now. I mean, quite a big, huge player in the place right now. So.
You know, and Dinshaw, this also is, telling us how the whole platform ecosystem is coming of age in the listed market, the public market universe, right? Because from Eternal, now you have Swiggy, and then you have PB Fintech, and there's obviously Paytm, and now there is Urban Company. So it's becoming a class in its own self. Maybe we'll have a fund on this also very soon. But within these new age consumer tech platform companies, which are the ones where sort of you have maximum ownership or maximum conviction? Because they come from different sectors.
Right. So basically, Surbhi, the fact that we look at platform companies very differently. I mean, what we try to see is whether that company offers convenience. Is that convenience cashable? I mean, can you cash that convenience? And is it a mass convenience? If all three segments are yes, I mean, answers are yes to this three questions. The fourth one, which is the most important, is it easily replicable? If it is a yes, then obviously that company is not what you're looking for. So it's obvious that we pick up these players, and that's why you'll see only niche plays in our portfolio as such. We got most of the platform companies, some we don't own. We got a PB Fintech, we have a Paytm, we got Urban now, we got an Indigene, which is a pharma-based platform play. We got Cartrade, which again is a very differentiated model in the space of monopoly, actually now literally in that space, though it's been suffering for a while, but for a couple of days. But I think that's one of the downturns that you see in life. So we've seen all these, and that's why we're very particular in what we pick. Obviously, I'll leave it here, and that's why we like, that's how we analyze our platform companies.
Okay, all right, got it. Interesting. Thanks very much, and thanks for the candor. Really, really helpful. I must compliment. It's very helpful when mutual fund managers can go out and at least talk about why they like what they like and where the conviction is coming in from, rather than more general conversation. So this is very, very helpful. Thank you so much. Thank you for joining in.